Viewers, you would have seen on the side screen that we are going to be talking or we are going to be presenting a very important conference. And just the fact that there is so much of interest that has come into the broader end of the spectrum to get a conference which focuses at that end is really important. And this is the 11th edition of this conference of the Motilal Oswal, what do you call it, mid-cap conference, ideation conference, wherein they focus on mid-caps and small caps, I believe. And on the sidelines of that, or as a preview or as a curtain raiser of that, one of my favorite guests and somebody who is magical with numbers, Gautam Duggad, Head of Research at Motilal Oswal Institutional Equities, joins us in our studios. Gautam, great having you. Thanks for joining in.
Right.
Now, I'm guessing that these times are fixed, but you would argue or kind of say, Gautam, that the stars are aligned because the mood in the markets is just coming back at the right time.
Absolutely, Neeraj. I mean, this is a conference which we host every quarter. And as you rightly mentioned, this focuses on mid and small caps. That's why we call it ideation conference, so that people can meet those 50, 60 companies at the ideation conference and generate those ideas. Our flagship, which we typically hold in August last week or September, this time again it will be in September, 21st edition. But this is now the 11th edition of the ideation conference. So we are expecting about 60 mid-cap and small-cap companies, ranging from all the way from 35,000 crore market cap to somewhere close to 5,000 crore market cap, representing diverse sectors.
Wow. One more question. I'm sure Harsh has more too. But what's the nature of the companies that are taking shape this time around? Is it the bruised and beaten down pockets as well, which are getting apart? I mean, how have you chosen these companies?
So everyone is bruised in this market. If you look at the last 3 months, the way markets have behaved, very few companies, maybe some financials can say they are not bruised or beaten down, especially the names that you were just showing on the screen. But broadly, every sector has been bruised and battered. Last 10 days has provided some ointment, but I would still say that, you know, if you look at today's market too, Nifty is still 12% down, which covered quite a bit of a ground. It was down about 18-19% till about 2 weeks back. But mid and small cap indices, and more importantly, stocks are still down 30-40% from their respective highs. As far as the companies in the conference are concerned, they represent various sectors. So there is a lot of interest which is coming in capex sectors again. There is interest in healthcare. Of course, there is interest in financials, consumption, and some of the tech sectors and new age companies which are there in the conference. So broadly, I would say, Neeraj, what has happened is in the last 3 months, the kind of price correction, the valuation knockdown that you have seen in the broader market, it has given a breathing space to investors. Till about October, November, it was buy first and think later, if at all you had to think, right? Now with prices,
you got time to think.
Yeah. Now with prices down 30-40% and there is no rush to buy, investors who have a slightly longer term view horizon, they can study, they can think, they can do their homework without worrying about that if I don't buy it today, I have to buy 10-15% higher 2 weeks down the line. So this conference therefore provides that platform where you get to, you know, especially the investors get to meet a lot of companies ranging across sectors and see how the year is ending for FY25. What are the corporates thinking as the March is coming to an end? I'm sure a lot of corporates will be sharing their FY26 plans. That's also true. And how the growth for FY26 is going to be.
Gautam, you know, one pocket of investors that have been buying, at least over the last month or so from what we've been noticing, is the promoter groups. We started to see them come back and starting to slowly start buying some of their own counters. Is this an indication that we're closer to a bottom where SMID is concerned, where the small and mid caps are concerned? Or do you still believe that the valuation froth that we saw hasn't fully cleared up and there's still some time to go?
So there are multiple ways to look at it. You know, last year you saw a lot of corporates sold, you know, private equity sold. You know, the total fundraise last year, including QIP, IPO, secondary blocks, private equity selling, would have been close to 4.5 to 5 lakh crores. So you are coming after a year of 5 lakh crore of selling, and what you have seen maybe 500,000 crores of buying. So I won't read much into that. Sure. Somebody was sold, say, 1,000 crores of his stock or 1,500 crores of supply is coming in and buying 5-10 crores, I don't think that gives you any indication.
Sure.
The only indicator is fundamentals, which is your earnings growth.
Correct.
Because in the long run, that's what has decided the direction of the market. I mean, till about FY24, if you had looked at the markets, FY20 to 24, the earnings growth was 26% CAGR for our broader coverage universe of 300 stocks. And broadly, Nifty has given you similar returns. Even on a 10-15 years basis, that is the only indicator to track. This year, all said and done, you can blame government spending slowdown, you can blame consumption slowdown, whatever you want to blame. The fact of the matter is you're going to end the year with 3% earnings growth. So sooner or later, the valuation had to catch up. You know, when we changed our model portfolio in July, predominantly towards large caps at about 76-77% weight, even we didn't know that market is going to correct 20-25%. In fact, between July to December, market went up. And I was thinking, you know, did we make a wrong choice by, you know, increasing allocation to large cap and some of the defensive sectors like telecom, IT and all of that. But market has its own way. You know, if it doesn't correct for some time and earnings keep disappointing, at some point of time, it will, you know, catch up. And you will see the resetting of those price valuation equation. So I won't read much into what some corporates have bought or not. In any which ways, bottom you will know only 3-4 months once it is crossed.
Sure.
It's very difficult to say that this is the bottom. Just like today we are confidently saying 26,277 was the peak. Hopefully 3 months, 6 months down the line, we would be saying that 22,050 was the bottom. But yeah, I mean, earnings is where I think there is some bit of positive news which can emerge in FY26. Because now a lot of things which impacted corporate earnings in the last 6-9 months are correcting themselves. Government spending is back. RBI, which had tightened a lot in the previous 18 months, they are unwinding all of those measures, whether it is liquidity, rate cut, or some of the harsh steps that they've taken against various entities, that has been reversed. So that is providing some confidence. At the margin, government is also pivoting towards consumption. I won't say they're abandoning the capex, but they're giving more focus to consumption now. So a lot of things are falling in place, and most importantly, in some cases, especially large caps, Neeraj, the valuations have now gone into a discount. Right? Mid-small caps are still trading at a big premium. So they need to correct.
On what earnings growth basis valuations?
FY26, we are talking about 14% earnings growth for Nifty and about 18% for our coverage universe. But look at it this way, this year you are ending Nifty at 3%, for our broader coverage at about 4%. But X of commodities, this year Nifty is growing 10%. That 10 next year is projected to grow at 13.
Okay.
If you don't remove anything, then you're going from 3 to 16. If you look at X commodity, it is going from 10 to 13. So then it doesn't look too elevated in terms of expectation. Similarly, for the broader markets where we are expecting earnings to move from 3 to 19, there also we are saying X commodity is going from 10 to 15. Right? So there is some expectation that some of the sectors which had faced very high base of FY24 margins, do remember that FY24 earnings growth was 33% for the broader markets. Right? A lot of sectors had hit a multi-year high margins, like auto, for example, some of the chemicals and consumer durables, those companies, sectors, those companies belonging to those sectors, they've been going through rough patch for some time now, cement, 2-3 years of earnings decline. So they all are going to now face a slightly more benign base. So therefore, earnings are looking slightly better than what we are used to in FY25, but still moderate compared to what we have seen between FY20 to 24, which was a very golden period of earnings compounding of 26%. So therefore, if you get that 14-15% earnings growth at an index level or at a very aggregate level, you can still find companies, 20-30 companies, which can outgrow the index and compound earnings at 20-25% next 2 years.
What would those sectors be, Gautam?
So I would think financials is a very interesting sector right now. I'm sure everyone you would have spoken to in the last 3 months.
It's the consensus buy, but it's not moving.
Yeah, it doesn't move till it doesn't move. And once it starts moving, then obviously a lot of things you can, you know, say that I had been saying this and he's been saying that. But the point is...
As is the case of Bajaj Finance, right?
Yeah, absolutely. See, till about 3-4 months back, Bajaj Finance was 16-17 PE stock.
Yes.
I'm looking at PE for Bajaj Finance because asset quality is broadly over a 2 decade has not really gone haywire.
Correct.
So 15-16 PE stock, growing AUM at 20-23, 24%, earnings growing at 25%. It was a matter of time before it had to rebound. Similarly, in rest of the financials, especially large private banks, some of the NBFCs, some of the capital market plays, AMCs, all of that, their valuations are very reasonable now. You know, you're getting 3 largest private banks of India, or maybe even 4 largest private banks of India at a sub 15p with ROE in 17-18 band. Now, I'm not expecting those price to book of 2.1 or 1.6 to go back to 4.5 in a hurry, or maybe they never go back to those levels. But can a 2.2 price to book or 2.3 price to book move towards 2.5, 2.6 if the environment becomes more conducive on credit growth, on deposit growth, CD ratio, and asset quality stays benign that it has been for the last 6 years now. So that pocket is offering a very good risk reward in our view. Then some of the consumer discretionary baskets, their valuations are still expensive, I would say, but they've corrected relatively in the last 3 months. A stock like Trent, which is growing top line at 40%, has corrected 30-35% along with the market in the last 3-4 months. Can it correct 10-15% more? The answer is yes. You cannot point a finger at the bottom and say this is the price from where it will not fall. But if earnings continue to grow at 35-40% for them, then obviously at some point of time, over a period of time, that stock will compound in line with the earnings growth. So there are many such pockets, healthcare, IT, where things are looking slightly better.
Can I intervene though? The conversation has been around large caps.
Yeah.
We are talking about the
Yeah,
ideation
absolutely,
mid-cap conference. So, wahan pe Gautam, where is it that, I mean, and I'm not asking you to choose one kid over the other, but what I'm trying to understand is what are the favorites, themes which are being showcased at this time ideations conference from the mid-cap, small-cap?
So specifically on mid and small cap space, as I mentioned, there are 3-4 very important sectors which are visible in our conference. One is CapEx. Now within CapEx, there are 10 sub-segments. Now power, transformers, distribution.
By the way, you can
T&D.
remove that earpiece. It doesn't matter.
It doesn't
Yeah, because I'm sure you can hear us well. So that's fine. Yeah, just.
So my point is, in CapEx, you can see power, T&D. That space is seeing very good representation in our conference. Second, hospitals and rest of the healthcare. Right now, healthcare has become a very vast ocean in the last 2-3 years. Till about 2018 or 2019, when you said healthcare, all you meant was the old generic companies and some of the bigger names. Today, you have 10 plus hospitals listed. 3-4 diagnostic companies are there, and at the same time, you have seen some recent new niche listings which have happened. Right now, healthcare, incidentally, both large cap, mid cap, the earnings have been the most consistent. 8 out of 8 quarters, I was checking the numbers, they've delivered growth excess of 15%, right? So healthcare has been a very resilient space. So that is obviously seeing a lot of interest at our conference. Then some of these discretionary mid-cap names, which are, I would say a very broad play on consumption.
Like?
Now, not staples per se, but say QSR, hotels. Now, these are spaces where the damage on business fundamental has not been much, and which is why they're outperforming relatively. One of the favorite names for us for last 5 years in the mid-cap space was Indian Hotel. Obviously, it is no longer a mid-cap now. But if you see the performance of hotel companies, they've gone through 10-12 years of down cycle between 2008 to 20. And last 4 years have been phenomenal. What used to be 14% EBITDA margin business has now become 35% EBITDA margin. Asset light, so balance sheet has improved vastly, ROEs have improved, right? Then you go into the niche IT companies. Obviously, the large 5, they comprise 90% of the profit pool and 92% of the market cap. But the real growth is in mid and small caps in IT, because large cap IT I have been seeing for last 5 years now, 7, 8 and maximum 10% growth you have seen. They provide a lot of stability and resilience to the portfolio, but the real kicker in tech has come in the mid cap space. So we have companies representing the mid and small cap IT space. And then of course in mid cap, small cap, a lot of things depend on your bottom up stock picking, not necessarily sectoral plays. So we have huge number of companies which I cannot put a bracket of any sector around it. Okay. But there are quite a few interesting names. And last 8-10 days of market action has given a lot of hope again to investors, to come back and see what has changed in the intervening 6 months. If business has not changed much, the earnings damage has not been there much, and if earnings visibility for next 2 years is still intact and valuations have come off, then obviously these are the times which lot of investors with long-term horizon actually wait for. Go back to the conversations in June to August when Nifty went from 23 to 26. I'm sure a lot of people would have told you, we'll buy at 10% correction, we'll buy at 15% correction. Mid caps are super expensive. We'll wait for 15-20% drop. So that drop is here. But you cannot be indiscriminate. You cannot be, cannot go and buy anything and everything which is available. The market is now being more charitable and giving you that chance to do your homework and then select, bottom-up pickings.
Last question.
Very interesting. Yeah. So, Gautam, I know that maybe not covered by the conference per se, but I want to try and understand your views with regard to how you view PSUs now. Very different light. We've seen a very good cycle. Can this cycle sustain? Is it a longer cycle that you see? And I'm not just restricting you to banks. I'm talking about PSUs in general. Coal India has fallen, for example. Again, just an example, just illustrative. And there are many other names which have fallen sharply. Do you think that the kind of very strong numbers that they are delivering, they can continue to do that, or inefficiencies have already started to creep in? What's your sense?
So look, 2023-24 was a huge correction for BSE PSU index. There is something called as a BSE PSU index, which I came to know about 2 years back when this index was rallying. For 11 years, between 2009 to 2020, the total market cap of BSE PSU index was between 10 to 11 lakh crores. It was a flat line for 11 years. We put it in our monthly presentation. Between then to 2024, at the peak, the market cap went from 11 lakh crore to 75 lakh crore in 4 years. Now that 75 lakh crore is down to 50 lakh crores, roughly 51. Now, when it was at 75 lakh crores, obvious eyebrows were raised that valuations have become, very expensive. They are representing bubble category. But the delivered profit of that index in FY24 was 5.5 lakh crore. So on a trailing basis, that is FY24 profit of 5.5 lakh crore and the peak market cap of 75 lakh crores. At index level, the valuations on a trailing basis were still 14 times. Now you can argue because this 14 used to be 8-10 times couple of years back, but still 14 at a very aggregate top-down level for PSU index was not, exorbitantly expensive. The problem in that index, however, is there are some companies like ONGC, Coal India, and there may be 4-5 more such companies which are trading at 3 to 4 times P or 2 to 3 times EV/EBITDA. And there are some companies in defense, in railway financing, which are trading at 40, 50, which had gone to 60 P also. We had actually put out a report wherein we said defense plus railway market cap in July 2024 had hit 18 lakh crores, which went up from 2 lakh to 18 lakh crore in a matter of 3 years. So 9x jump in market cap in 3 years for defense plus railways when profit went up 2x. So what used to be a trailing P of 15 became a trailing P of 60 in a matter of 3 years. Wow. Now that 18 lakh crore defense plus railway market cap in 6 months is somewhere down to 12 to 13 lakh crores. So there are still pockets within PSU also which are very expensive, and there are companies where you get 5 to 6% dividend yield, 8 to 10% earnings growth, and P's and EV/EBITDAs which are very reasonable. So again, just like in rest of the market, whether it is mid cap, small cap, large cap, even in PSU, you have to do the bottom up, top down, and marry that. No, because there are a lot of companies which might be available at 4 to 5 P also, but the earnings growth may not be there. Yeah. So you don't go up and buying, because then it becomes a value trap. So you have to be very cognizant of what you're getting into.
Sure. Certainly. Well, I think we'll get a great insight into some of the themes over the course of the next 3 days when this conference is happening. And the conference and all the action from the conference will be live on NDTV Profit. So be rest assured on that. But on that note, Gautam Duggad, such a pleasure talking to you, and good to see you in our studios.
Thank you.
All right.
Thanks, Gautam.